A new report from Desjardins says Canadian provinces are benefiting from population growth this year. However, the economist behind it still sees an economic downturn coming in 2024. For more on which provinces will feel it the most, let's bring in Marc Desormeaux, principal economist in Canadian economics at Desjardins. I almost got it all out there. Marc, thanks so much for coming in today. Appreciate it.
My pleasure, Jacqueline. Thanks for having me.
So it's interesting because you were looking at sort of the growth of these provinces this year so far, and some of the reasons that we've seen economic activity pick up in provinces like BC and Ontario in particular, coming from the housing market, and then where they go from here. So just give us a sense first of, how these provinces are, performing, I guess you could say, so far, and then we'll get to where they're headed.
Jacqueline, I'd say that there are three main themes from this report. The first is that in this environment of a slowing Canadian economy, we think that the commodity-producing provinces will fare the best in terms of economic growth. The second thing, as you said, is that we've revised our projections significantly higher for Ontario and BC, in large part because of the strength of the housing market to begin 2023. The third point I would make is that population growth, very, very strong population growth, is supporting economic growth across Canada.
And where is that being seen the most, that population growth and, what it's adding?
The two provinces that have witnessed the strongest growth to date in 2023 are Alberta and Prince Edward Island. They're both right around 5% year over year. And what's particularly positive for those two economies is that growth is coming from balanced contributors. They're getting help from immigration, interprovincial migration, natural growth, and net non-permanent residents. Net non-permanent residents have been an interesting development of late. They're actually responsible for about 60% of the Canadian population growth over the last year. And this is a category that tends to ease pretty significantly when the economy slows. So it means that provinces more reliant on that category may be in for more of a slowdown as the economy moderates.
We've got one of your graphs up. I think that's just illustrating what you're saying there in terms of the breakdown, right?
That's right. And if you look at the graph, British Columbia and Ontario are both, over the last year, they've both seen about 70% of their population growth come from net non-permanent residents. So for us, we see that there may be some risk of slower population growth and slower economic growth associated with that for those jurisdictions in particular.
Now, some of this population growth driving some of the activity in the housing market, too, I would assume, in terms of demand in some of these provinces?
Surging population growth, and I have to emphasize how strong this is. The last time Canadian population growth was this strong was before the last time the Maple Leafs won the Stanley Cup, just to put it in perspective.
Wow, and I've forgotten what year that is. It's been a while.
1957.
Okay, there we go.
67 for the Cup, 57 for the last time we saw growth this strong.
I'm probably going to get, in trouble for that, but there you are. Yeah.
But there you go. And when we have that kind of growth rate, it really does contribute to the economy in a significant manner. So it's something that's contributing across the provinces. It has contributed to the housing market, to housing demand, but it's also something that we think can contribute to supply over the longer run, to the extent that skilled immigrants, skilled temporary foreign workers can contribute to filling labor shortages within the construction sector. That's something that can contribute to boosting the housing supply and ultimately improving affordability over the long run.
When you look at the housing activity pickup, particularly in BC and Ontario, I thought it was interesting how you talked about the possibility that could end up taking a toll down the road. So if affordability is stretched for homeowners or people who just purchased a property during this time, then down the road we could see those consumers pulling back more? Is that your expectation?
Certainly in the most affordability-stretched jurisdictions, higher interest rates have the most impact on mortgage payments, as well as what kind of homes folks can afford. So we do see that there is potential for consumer spending to be more impacted by higher rates, by these higher prices going forward. But over the longer run, I'd actually highlight a study that we did at Desjardins Economic Studies just within the last few months, looking at the implications for Canadian youth. And what we found is that youth are so important for innovation, for entrepreneurship. This generation of Canadian youth is particularly dynamic in that respect. So when we have so much unaffordability. This is something that makes many parts of Canada less competitive and ultimately losing out on that opportunity presented by Canada's young people and their ingenuity long term.
When you're looking ahead to next year and the potential for economic growth, the oil-producing provinces you see the most potential in?
Yeah, it's really kind of, there are two factors behind that. One is that commodity production is picking up, particularly in oil production, Saskatchewan and Alberta in particular. Oil prices are still strong enough to support industry profitability and economic activity. The second thing I would say about some of these provinces, particularly looking at Alberta, Saskatchewan, Newfoundland, and Labrador, is that they're less oriented towards housing-related sectors that we would expect to increasingly feel the pinch from sharply higher interest rates. Financial services, residential construction, real estate rental and leasing, these are the sectors that tend to get hit the hardest when interest rates go higher. They make up a smaller portion of GDP in Alberta and Saskatchewan than they do in Ontario and BC, for instance. And
in terms of population growth in Alberta, do you see that as, being something that would be sustainable, the trend?
Well, Alberta's population growth looks pretty durable to us. And as I mentioned at the start of this segment, Alberta's getting contributions from all the major components of population growth. Young people are migrating there because it's affordable and there are good economic opportunities. Immigration's picking up. Net non-permanent residents are filling job shortages and going to schools in Alberta. And then as a young population, so natural growth is contributing as well. What this means is that when we get into a period where net non-permanent resident admissions may slow, Alberta has other sources of population growth that it can draw on. I'm curious, just in terms of,
the economic environment and, uncertainty around oil prices going forward, if that could end up having being a drag on Alberta's economy, though.
Certainly, when we have financial market uncertainty, when there is concern about a global economic downturn, that is something that can weigh on oil prices. What I would say is that global supply concerns are something we see putting a floor under oil prices, global oil prices. The other factor that's important for Alberta and Saskatchewan in particular is that the discount between US oil and Canadian oil has tightened quite significantly relative to what was expected last year. And that provides an offset to the drag from lower WTI.